Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of September 30th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was definitely a good week for Maryland mortgage rates. Rates move lower again. They've been on this nice wild ride of moving lower for the last 2 weeks. So if you look at the bond chart on the screen, that big blue line there represents a huge layer of resistance. Every time we hit that, bonds turn lower and rates jumped higher. We were finally able to break above this level of resistance, and bonds rallied higher, interest rates moved lower. So if you look at the trend now, we had a long-term trend of bonds selling off. Now we are on a trend of them rising higher. So we are going to recommend floating your Maryland mortgage rate to start the week to see if this trend can continue. But interest rates are back at a level we haven't seen since June. So if you've got a rate you like, you may want to go ahead and lock it in, but you can float to start the week. Now, if we dig into economic news, the first one was we had a final reading on second quarter GDP, gross domestic product, which measures how well our economy is doing. That came in lower than expected at 2.5%, down from 2.7%. That reading shows the economy is growing very moderately. Not great for recovery. And the outlook for the second half of the year is even worse. So we're looking at the economy slowing. That's not what the Feds want. That's why they kept this tapering program going we've been talking about. Now, we also saw a measure on inflation, two measures on inflation, personal consumption expenditures, called the PCE. That came in at 1.2%, well below the target of 2% for the Federal Reserve. And then the consumer price index, the CPI, for August dropped to 1.5%, down from 2% in July. Again, below the target rate of 2% for the Federal Reserve. So this is showing inflation is very low right now. That is great news, because if inflation kicks in, the Federal Reserve will have to raise rates and have to taper their bond buying program, or inflation will run away. So as long as this keeps remaining tame, we are in good shape for the accommodative policy by the Feds that supports low interest rates. Now, we saw some readings on the economy from consumers. The consumer point of view, two reports. Consumer confidence dropped to 79.7, which was the lowest reading since May. And then the consumer sentiment dropped to 77.5 for September, down from 82.1 in August. Again, consumers are not feeling real good about the economy right now because of all the stuff going on. There's a looming government shutdown that is that's helping boost the bond market, helping rates be lower. That is not good for the consumer confidence. Then the weekly initial jobless claim came out on Thursday. It dropped to 305,000 claims, down 5,000 from the previous week. The states that weren't reporting accurately now reported, so we have good solid numbers. If you look at the chart, weekly initial jobless claims has been falling. So that's good news for the labor market, but we need to see good jobs, not part-time jobs, and not low-paying wage jobs. So we'll see in the jobs report, which comes out in October, how that plays out. Now, just a point here, you may want to consider locking going into the jobs report, because if it comes out better than expected, that could take some steam out of the bond market, and we could see rates start to move higher in the short term. So if you got a great rate, lock it in if you're happy with it. In the housing news, housing is still doing great. The Case-Shiller 20-City Home Price Index rose 12.4% from July 2012 to July 2013, and it showed a 1.8 increase from June to July of this year. Now, pending home sales for August 2013 were down. They were down 1.6%. And that is contracts to purchase existing homes during the month of August. Now, we were expecting that to go down because of the jump up in rates for some people to buy earlier than they would have, so we were kind of expecting that. Now, if we look at the new home sales, numbers were great there. 8% increase August 2013, up to 421,000 units. Now, new home sales is a measure of the number of new construction homes signed and bought that month. So, again, builders are doing great. Housing is doing great. Now, in a big update for FHA, HUD had a rule that was going to go into effect October 1st, 2013, which said that if someone was doing a short sale on a home that had an FHA loan, a broker and all their agents cannot represent both the buyer and the seller. It doesn't seem like a big deal, but it is. That's basically saying, hey, if RE/MAX lists a home for sale, no RE/MAX agent can show that house to their buyer and represent their buyer, because they consider that a dual agency, because they all work for RE/MAX, which is ridiculous. So NAR, National Association of Realtors, was able to postpone this implementation of this rule, and they're working to get it just wiped out altogether. So that's great news on short sales. Now, in the local news, the next free first-time homebuyer seminar is Saturday, October 19th. That's in Towson, Maryland, from 10 a.m. to noon at the Baltimore Sheraton North Hotel. You can register for that event by giving us a call in the office, 410-412-3319, or register online, MarylandHomebuyersSeminars.com. Look forward to seeing you guys next week.